South Africa's total new vehicle sales increased by 10.5% year-on-year in October and partly boosted by record low interest rates. Here to give us a view on the numbers is Sydney Soundy, who's head of vehicle and asset finance over at Standard Bank. Sydney, thanks so much for joining us today. Well, the numbers we're seeing today are pretty much a reflection of what's been expected for the year-to-date figure.
Indeed, the expectation is that this year will end up at a 10% increase from last year. So it's no surprise, and as you see from the October performance perspective, 10.5% in line with that average growth over the year. So we expect that by the end of this year we'll have had increases of in and around 10%.
Sydney, how sensitive is the market, the prospective buying market, the prospective person that wants to go out there and buy a vehicle? How sensitive is that person to an interest rate fall? And if there is a sensitivity, is it because the finance companies that are linked to banks and linked to other institutions come up with some fairly exotic ways of financing a vehicle? Is that a big part of it? That's question number one. And number two, how much of the 10.5% increase is because cars are relatively cheap and people are buying relatively cheaper cars, the smaller, more compact cars?
I think, Lindsay, the way we should look at this is that the contribution of the passenger segment of the market is 70% overall in general to the sales numbers that are released. So passenger market is a very significant part of these numbers. And to your question, in terms of individuals that buy, quite a lot of individuals buying passenger vehicles, although they also do buy light commercial vehicles. Those individuals are largely salaried, and as a result there's consistency in terms of availability of cash to purchase vehicles. So there is a consistent availability of cash, which means that there's also predictability in that sector. What is largely impacted by changes in economic impacts and issues of strikes, etc., is largely in the commercial sector.
Taking a look at the shifts that we are seeing within the consumer market specifically, though, I mean, when it comes to vehicle, your vehicle, passenger vehicles specifically, we've seen growth in diesel, hybrid, petrol increasing significantly compared to your petrol vehicles, and that's illustrative of the kind of shift we're seeing in mindset on account of the hefty fuel price increases we've been seeing in South Africa.
Indeed, over and above the change towards hybrid fuel vehicles, we've also assessed to see to what extent do people change from smaller engines to bigger engines. And in our discovery, we realized that actually that does not have a big impact. What has a big impact is the affordability of the vehicle. And to Lindsay's earlier point, mentioning the fact that in terms of vehicle price inflation, we've seen vehicle price inflation tracking below general inflation. And to the extent that the interest rates are at the levels that they are, people focus on ensuring that they purchase affordable vehicles and then they can replace those vehicles at the time when they're supposed to be replaced.
Just how much longer they're going to be able to afford them, though, is a big question, where you've got rising inflationary pressures and then a weaker rand looking to push these prices higher moving forward. What's your forecast in that regard?
Indeed. So as we look into 2013, we think that the current 10% increase is going to be much more subdued. And obviously there are various estimates from different perspectives. And those estimates range between 4 and 7% for next year. So those specific pressures that you've mentioned, the global economic impact will have a say in terms of how this market performs. And to the extent that the European market is vibrant or otherwise, that also has an impact on the export market. So there is certainly going to be an impact as we go into 2013.
Sydney, looking at, you talk about this, the 70% of the market being accountable by passenger vehicle sales, but it's the LCV, the MCV and the HCV market that sort of would probably interest economists slightly more. Have you done a study on the correlation between a pickup, for example, in those commercial vehicle sales and the growth of the economy? In other words, simplistically, I look around town, and if I see buckies everywhere racing around, presumably they're going to do business, and that's a good thing for the economy. Do you see that correlation? And in that case, is there a case to be made for this to be a leading indicator? In other words, if people are buying more commercial vehicles in the future, the economy will pick up.
Indeed, there is a connection there. But to the earlier point that I mentioned, if you look at the year-to-date growth, that year-to-date growth has largely been impacted by the passenger side of the market, as well as the light commercial vehicles that you've just mentioned. So the activity is largely in the small space in terms of growth up to thus far. As far as the commercial market is concerned, these days, Lindsay, there's much more scientific ways in which big fleet managers are managing the optimum replacement cycles for vehicles. So it's no longer about seasonality. It's much more about when it is the right timing for replacement of vehicles, such that there's sufficient value and efficiency in the cost of running such a vehicle. So we see very astute ways in which vehicles are being replaced as far as the big fleets are concerned, no longer about the seasonality in a year.